In today's video, I will cover my portfolio here at age 77, and hopefully I'll show you as simple, safe, and stress-free as it can be. But to start off with, I want to kind of compare that to a lot of the videos today we see on the retirement channels from YouTubers who have retired recently, and they're sharing their retirement journey with you. And they do an excellent job. They talk about what's in their portfolio. A lot of them say they retired with $500K and they want to make that last. And a lot of them try to live within Social Security, and they show you their budget and how expenses are going. And it kind of gives you an idea when you get ready to retire, you don't quite know what to expect. Those are very helpful for people that are just entering retirement. But what about somebody like me that's been retired over 10 years for sure? Basically, I retired when I was 58 and I'm 77, so that's 19 years. In this video, I will share what's in my portfolio, how I'm doing, what my allocation is, and why I decided that, what my investment philosophies are, what my stock investments are, what my fixed income investments are, and why, and just a general comparison to some of the where I was back in the day when I early retired is quite different. Okay, let's start with my investing philosophy. And I'll just say right up front, this is not investment advice. This is not representative of all people that have been retired over 10 years by any means. It's just my portfolio and the way I look at things. I'm just sharing with you for whatever that's worth. And I think I would like to be stress-free as much as possible. I want some investments that are low cost, safe and secure. I like to keep up with inflation, of course, and that could be a problem in the future. But the main thing is to keep what I have and not lose it. So that's my investment philosophy in a nutshell. Let's take a look at portfolio allocation. I'm going to put a chart up here. This is the overall portfolio allocation. Now I show currently I have 32% stocks and 68% fixed income. You know, I think this allocation to me is simple, it's tax efficient, and I want to have some liquidity. If I need some money, I'd like to be able to raise it real fast and not sell and pay these capital gains taxes. So the fixed income part gives me a good steady cash flow. I like that a lot. You don't have to sell anything. I got either interest payments or bond redemptions coming in just about every month, and that's nice. Stocks, on the other hand, are very nice to have to keep up with inflation, and you get your long-term capital gains. Another thing I like about stocks is when you pass away, your heirs will inherit your stocks, and the basis, the tax basis, will be a stepped-up basis, valuated based on the date you passed away. And therefore, if you sold it the same day, the same price, you pay no capital gains taxes. And that's a very nice benefit. So in summary, portfolio allocation is very important. And I think the older you get, probably for most people, not everybody, but it depends on your situation, of course. And I'm not giving advice. I'm just saying for me, I don't want to take undue risk. The last thing in the world I want to do is to lose what I have. I'm comfortable financially, and I want to stay that way. I'm not looking for home runs and big gains. I'm looking for maintaining my purchasing power of the money I do have and not running out. That's what I'm interested in. So in my stock allocation breakdown, let me first talk about VTI. That's the Vanguard Total Stock Market ETF. It's a very large total stock market index. It's got, I think, over 5,000 U.S. stocks. It only yields 1.1% dividend, which I like because dividends are taxable. Those dividends they do pay are qualified dividends, which you pay a less tax rate. There's not a lot of capital gains in this ETF because they don't trade. It's an index. I took this position back in 2 years ago in October of 23, and I have over a 40% gain on it, which is absolutely wonderful for me. Let me put this next sheet up saying why I use VTI in my regular account. It's tax efficient, it's broadly diversified, it's got low management fee, and it's just a perfect companion to my fixed income. Now, you may notice on my stock chart, I do have the Schwab U.S. Dividend Equity ETF, SCHD. Now, I own that in my IRA accounts. And the reason is because this pays a dividend. It's currently paying like 3.7% dividend. And I like it because it grows your dividends. It holds up really well. They said in 2020, when there was a big dip in the stock market, this ETF did not reduce their dividends. So now let's jump over to fixed income allocation. I love fixed income. Right now, it's only 68% of my portfolio. In 8 years, I'll be 85. So I got a bond ladder that takes me through age 85. I've stacked it heavily the first 3 years, and I'll tell you why. The reason is because the next thing I have in my fixed income is single payment immediate annuity, SPIA. I just bought 3 of those this year, and they pay me a monthly income for life based on my life and my wife's life. So if one of us passes away, the other will continue to receive the exact same monthly payment. I love that. What kind of pushed me towards this? What happens when I make all the financial decisions and say I start having some memory problems or cognitive problems, and my wife has never really enjoyed getting involved with the finances? This will just give us an automatic payment we don't have to worry about. We don't have to sell anything or buy anything. We're fixed for life with the single payment fixed annuity. So when we turn 80 in 3 short years, I want to look at our health and see where we stand, and I may buy another annuity to start payments when I'm 85. And that way they base it on your age at 85. So you'll get a lot more money per month than I would if I made the payments effective immediately. So within our bond ladder, I should say, I really invested in state municipal bonds. It does help me out for taxes. Lately, I bought T-bills and Treasury notes. So I told you that my bond ladder was biased towards expirations in the next 3 years. And those mostly are Treasury bills and Treasury notes. They pay pretty good rates, and they give you that safety there, and they give you cash flow, and they give you liquidity. I do have 10% of my fixed income investments in VTEF. That's Vanguard tax-exempt short-term bond. This was easy to buy, and it's easy to sell. Finally, I have the Vanguard TIPS ETF in my wife's IRA account. Okay, so the next chart I'm offering up is my retirement portfolio allocation, the percentage they comprise of my total portfolio. So if you look at the top there, you got VTI in my regular account, and so that's 24% of my total portfolio. You got the SCHD, 8%. I got a bond ladder that's 50%. Next is the SPIA, 9%. Next up, I've got VTES, and that is 7%. So all of this adds up to 100%. So I just want to hold on to what I have and keep up with inflation and maybe a little growth and have some good cash flow with something simple and safe and I don't have to worry about. But I do think when you get in your 70s and 80s, I think you do have some different needs and wants from your portfolio than you do when you are actually just retiring. So that is different. Now, one size does not fit all. There are probably some very aggressive people out there that really want a lot more stock than I have, and that you have done great in your life owning stocks, and that's wonderful, and more power to you. So I'm not saying you should do this. I'm just giving you an example of what I do and how I've become a little bit more conservative as I got older, and I have different wants and needs for my portfolio to give me at this stage of my life. So I'd love to hear from you in the comments. How's it working for you? What are you invested in? How much fixed income do you have? How much equities do you have? And are there any surprises as you got older? All right. Well, thank you very much for watching. This is Robert's Active Retirement, and we will catch you later.